hedge fund manager Chris Burns says that the situation in the eurozone is spiraling out of control, and the longer the region puts off addressing its problems, the worse it is going to be. Chris is the founder of Goshen Investments, and he joins us now in business. Good morning to you.
Hi, Margaret. How are you?
The last time you were on, you were quite bearish on Europe, and that hasn't changed. You think the picture is getting darker?
Well, I think that, as we mentioned at that time, the Europeans were engaging in hope and delay as a strategy. Their economies are now slowing, so the fiscal challenge grows more difficult. The banks are in worse shape. There's a serious liquidity problem building in Europe. And I would say overall the globe is in some ways in a more challenging position than it was in 2008.
How do you mean by that? Because there aren't those backstops of the lender of last resort ready to go?
Well, I think, first of all, if you go back to 2008, we really had a subprime crisis that originated in the United States and then radiated around the world. Whereas here, we have multiple simultaneous crises. We have a slowdown in the U.S. and a lot of concerns about our banking system. We have a liquidity crisis and a fiscal crisis in Europe. And you have inflation in China, which has really backfired, and the Chinese economy is slowing. So we've got multiple challenges at one time now.
And when we look at the world of hedge funds right now, based on some of the work we've done, hedge funds are at their most bearish that they've been since 2009. So it's reflecting some of what you're saying there. But it still hasn't impacted corporate profits to the extent that forecasts are still for a 17% increase in corporate profits for 2011. It seems like there's a little bit of a cross current. Well,
I think that those estimates are going to be cut, and the street typically acts with a lag, and this is a classic case of it. People have started to backload their estimates. Companies are guiding, well, we didn't have such a great first half, but it's all going to come through in the second half. And what we suspect is going to unfold is that there's going to be no magic solution in the second half. Estimates are going to be cut. People are scrambling to catch up with the underlying reality. And I think, as you referenced earlier, a lot of dry powder has been used up. 2007, 2008, governments were in a stronger position. Central banks hadn't used up all their bullets. Now governments around the world are broke. Central banks have tried all kinds of unconventional solutions. And I think now, the next time we go into this, we're just going to have to find out what things look like without this much government interference.
Is the bond market wrong to bet that we'll get $500 billion or more in Treasury purchases from the Fed?
Well, over time, the Fed will certainly continue to engage in a variety of operations to ease liquidity in the U.S. I think one of the most important things that they're going to do is continue to give European banks, through lending to the ECB, access to U.S. dollar liquidity. That's probably the most crucial thing they're doing right now.
And we saw at least the Swiss National Bank tap about $200 million in dollars.
Correct.
Via that.
Correct. And I think that will be a growing trend because U.S. money market funds are looking to scale back their exposure to European banks. And so the Fed and the ECB are going to step into that breach. So the Fed will continue to be very active. But in terms of a QE3, and we have Bernanke speaking later this week, they're going to have to proceed very carefully. Number one, I think we're all more aware that quantitative easing is no magic bullet. And number two, when they go to use that bullet of QE3, it's got to be decisive. And if it's done, and it's got to be done in a coordinated, consensus-driven way. And if they go into it half-baked, then they've shot their last bullet, and that would be a big problem if they do it in a half-baked way.
So what is that silver bullet that would make you change your bearish outlook?
Well, it's not the central banks. I mean, you know, we've seen what QE2 did. It drove up inflation. It drove up commodity prices that squeezed the average American. It put pressure, arguably, by making input prices more unpredictable for corporations. It didn't do a whole lot of good now that we see the smoke clearing. So what's going to make us more optimistic is allowing corporations and individuals to find out what's going on without the constant intervention of the government and the constant instability the Fed is creating.
When you say find out what's going on, not provide support for the market, allow it to find its own bottom? What do you mean by that?
I mean, the market's got to at some point find its own way without this constant interference from the Fed. I mean, the activist Fed is interfering with price discovery. And I think that's something, that's not what the Fed was designed to do. It was designed to provide emergency liquidity. It has since morphed into a much broader role where they're publicly saying they're going to prop up asset prices and take on all kinds of other missions. And I think people are asking questions about whether this is the proper role for the Fed and what are the side effects of all these activities on the average American.
Now, you did quite well during the crisis by betting against U.S. financial institutions. You had seen some of the risks headed their way. I mean, these days, is it as clear of an environment to invest around?
Well, I think it's a much more diverse set of challenges out there for investors. I think that there are companies much better positioned because I think companies have been more conservative in many ways. They learned a lot in 07, 08. At the same time, there are people with unresolved problems. The regulators around the world, and that includes in Europe and the United States, have really hoped for time to sweep away a lot of the non-performing loans, and they're still there. Look at the housing situation in the U.S. It's still an unresolved problem. So it's a mix of things. We see opportunities. I see opportunities personally across a broad spectrum of assets, but it's more complicated than 07, 08.
So if you don't support further Fed intervention, what about further government support of, say, Fannie and Freddie to help even expand an already substantial role in the mortgage market? What about the expansion of the European Stability Fund? I mean, what are the mechanisms that can be deployed to help, or are you against all of that?
Well, I mean, from a personal perspective, I'm really questioning, I mean, what good did Fannie and Freddie do for this country to begin with in terms of now they've become a contingent liability, probably running into hundreds of billions of dollars. The government convinced a lot of Americans who couldn't afford homes and were well off renting to go lever themselves up and take on financial commitments. And in the case of Fannie and Freddie, a lot of these executives were pocketing huge bonuses with government backing. So I don't think in the end Fannie and Freddie did a lot of good. I think that in terms of Europe, we've got to let, if the Greek people, they can't repay all this debt.
Right.
So I think we've just got to let reality set in rather than continue to have more and more institutions taking taxpayer dollars to prevent reality from flowing through.
Is that like a eurozone environment that you hear PIMCO's Mohamed El-Arian support and others basically separate the strong European nations from the weak?
I think a year from now, there are not going to be 17 members of the eurozone.
No.
I mean, the eurozone was undertaken with noble objectives, but to try to rope 17 different countries together under one currency is not a realistic long-term project without significant convergence. It was meant to actually reduce political tensions. What is it doing today? It's aggravating tensions between Germany and the rest of the EU, between France and the rest of the EU, and it's backfiring. So something's got to give in the eurozone. What it will be, exactly how it plays out, no one will know.
Yeah. But brace yourself, Chris. Thank you very much for giving us your perspective.